Roth conversions can quietly cost you thousands of dollars beyond just the tax bill. Unfortunately, most people don't find out about this until it's far too late. There are 3 hidden costs that can decide whether a Roth conversion is worthwhile, makes sense, or not. In this video, we are going to break down each of these 3 hidden costs so you don't make a Roth conversion mistake that you can't undo. Most people focus only on the income tax bill that they're going to pay from doing the Roth conversion. And that makes sense. If we're doing a conversion, we're probably doing it because we want to pay tax now at a lower rate and avoid paying tax later at a higher rate. So obviously the taxes are top of mind. However, the taxes aren't the only cost potentially. So in order to do a confident, smart Roth conversion that actually benefits us in the long term, we have to believe that all of the costs added together are worth the long-term benefits. An important concept that I want to make sure we're clear on before we move ahead is the idea that when we're doing a Roth conversion, we are choosing to increase our income that's going to show up on our tax return that year by the amount that we're converting. That means that our adjusted gross income is going to be higher than it normally would be if we weren't doing the conversion. This higher adjusted gross income is what can trigger additional costs and expenses of doing the conversion. And unless you know about them ahead of time, you wouldn't even know it when the time comes. So let's dive into these 3 hidden costs that can be triggered by higher income so you can make smart Roth conversion decisions for yourself. The first hidden cost of Roth conversions is increased Medicare Part B and Medicare Part D premiums, otherwise known as IRMA. Those of you that are on Medicare and are on Part B and Part D pay a certain amount every month for those coverages. If your income goes above certain limits, those premiums increase. So we could, without even knowing it, do a Roth conversion that pushes us up over those income limits, which means we're going to pay higher Medicare premiums in the future. The tricky thing here is the 2-year lag between when we do the Roth conversion and when our premiums go up. That can mean that we do a conversion now, we haven't thought about the impact on our Medicare premiums, and then 2 years down the road, when we get our letter in December about how much we're going to pay for the next year, we see numbers that surprise us. So it's really important to understand those IRMA income limits and what our Roth conversion is going to do in terms of how much premium we're going to pay in the future, and we understand what the added costs are to doing that. So we can add them on top of our income taxes as a cost to doing the conversions. Hidden cost number 2, losing health insurance premium credits if we're buying health insurance on the marketplace between retirement and Medicare. You might know that when you're buying health insurance on the marketplace, if your income is below certain limits, you can qualify for lower premiums through premium credits. But if we do a Roth conversion and we cause our income on our tax return to be higher, we could be in a phase-out zone or cross over a cliff where we receive no premium credits. And that can be a really expensive cost of doing a Roth conversion. So it's really important to understand if our Roth conversion is going to impact our health insurance premiums if we're going to be buying them on the health insurance marketplace before Medicare. Last but not least here, and this one's relatively new, the third hidden Roth conversion cost involves the new senior exemption that came out of the big beautiful bill from last summer, the summer of 2025. Quick explanation of that. Taxpayers over age 65 are now eligible for an additional exemption that can go on top of your standard or itemized deduction to help you pay less tax. It's $6,000 a person. There are income limits where if you're in the income limit phase out range, that $6,000 will go down. And then if your income is over the top of the range, you lose the exemption altogether. When you lose an exemption or you have less of an exemption, it means more of your income is taxed. And that extra tax from losing the exemption is an additional cost. So we have to understand where we stand within the income limits of receiving that senior exemption, which for a married couple is up to $12,000 of exemption, which is a big deal. So we have to understand where we are and how that will be impacted if we add additional income to our tax return via a Roth conversion. So the key here is to understand which of these costs on top of our tax bill apply to us. Are we going to be impacted by increased IRMA or Medicare Part B and D premiums? Are we going to be subject to losing premium credits on our health insurance through the marketplace? Are we going to lose some of our senior exemption or a combination of a few of those? We have to understand which is going to impact us and then do a really simple math exercise to add up the tax bill and all of the additional costs from increased premiums, losses of exemptions, or increased Medicare Part B and D costs to see what is the real cost of our Roth conversion so we can understand what it's going to cost us right now and then do our best to decide, hey, are those costs really worth the long-term benefits of the conversion so you can move ahead with your Roth conversion strategy confidently and understanding all of the potential costs to you right now.